What's going on, guys? Welcome back to the channel. We're doing a stock analysis, actually a stock update on Facebook. Now, a few months ago, I put out an analysis on this company just before they released their earnings, and the stock prices dropped down by a significant amount. So much so that I liked it so much that I opened up a small position. Now, I'm going to load this company in the stock research tool to grab a better look at it and see if we still like this business. So, currently, we are sitting at $180 a share, folks. Now, we're going to jump into the fundamentals of the financials and do a price analysis afterwards to determine what a fair price to pay for this company would be. $180 for a share price, for the share price right now. We're seeing a massive decrease in price over the last little bit. Well, look at that. December 27th, 2021, $346. And now we are sitting at 180. We did see a little bit of a climb in late March up to 229, and now we are just pretty much half. Look at that, 52-week range. We got as low as 179.5, which is they probably hit that today. And now we are at the low end, and with earnings coming out pretty much earnings are coming out tomorrow, and this video will be released tomorrow and Wednesday, April 26th. So I'm very excited to see where this company will go. Let's look at what this company has to offer by going through the financial evaluations category. And let me know, guys, if you like this style of looking through the page or going through my analysis, if you prefer that compared to my older style. Drop a comment down below. I appreciate that. So looking at the financial evaluations, just jumping into it, we're scoring this a 9 out of 10. Now, this company does a lot of things right. The one thing that it's not doing right is a 5-year PE average sitting at 26.58. Now, I'm okay with that if growth can continue, but if you look over here to our company metrics category, our PE ratio is sitting at 12.71. Granted, that's just due to that huge decrease. So I'm liking that. I don't know if you guys can get behind that, but I'm liking that. Now, listen, as I was saying earlier, a high PE ratio can be completely justified if it can continue this growth, which we will dissect in a little bit. Current ratio is extremely healthy at 3.15. We want this over 1.5, and it's double that. Return on equity is also phenomenal, sitting at 24%. We want this to be 15% or higher, folks, and that is a healthy number, as we can see. EPS growth, huge EPS growth, folks. And if you just jump over to the company metrics, just as a quick comparison, our 5-year number is higher than our trailing 12-month number is higher than our 5-year average. So massive jumps. We are currently sitting higher than what our average is. They're making a lot of improvements there. Debt to equity, that is sitting at 10.21. Now, we want this number to be underneath 50%, folks, and that just means that the company is growing through equity within the business and not through debt, and doesn't owe that much to creditors. Definitely take a moment, if you're subscribed to my channel, check out Finance Talk. Amazing investor named Eugene, and we just had a discussion a few days ago, and we were talking about debt to equity as just a side step. He likes companies that are under 30%. I'll link his channel down below. Awesome guy to listen to. Also, he's very informative, and hopefully some cool things coming up very soon, so stay tuned for that. Share dilution. The company is buying back shares, which is amazing to see. We want this number to be decreasing, which we have, or staying the same. So Facebook is doing that. And now just going down these 4 major boxes here, folks, we have net income growth, free cash flow growth, a healthy return on invested capital sitting at an average of 25%. We want this to be 10% or higher. And if we just scroll over here to our company metrics category, we will see that it is sitting at 32% for the trailing 12 months. Guys, these are phenomenal numbers. I don't know if you notice or how important these numbers are. That just indicates of how much they get a return on their money that's being invested. 25%. Phenomenal. This is a company that just knows how to make money, folks. It's a money-making machine. The Zuck is back at it again. Revenue growth is up at 33%. And now I just want to rewind it just a little bit and look at our free cash flow. Take a look at this. $23.4 billion on average for our free cash flow, currently sitting at $39.12 billion, guys. So everything about Facebook is they have strong fundamentals. They have strong financials. The one thing that just truly drives this price absolutely bonkers and declines, and you can see it here, and I'll pull it up on the chart. Check this out. Do this. It's just controversy. And controversy is not a bad thing. We want to see controversy because, listen, this is when the price goes on sale. There's controversy here, controversy there. Like, actually, no, sorry. This is this is the pandemic. What am I saying? But there's controversy. I forget what it was. When there was that whole scenario when anytime Facebook's in the news for, I don't know, privacy and stuff like that, like they're always the price is decreasing. Oh, that's it. Listen, they run ads. We know that. You have a choice to either be on or off the platform. It's up to you. But listen, they have every 1 in 3 people. I think it's that thing. I'm pretty sure that's the number. 1 in 3 people have a Facebook or a Meta app. That means you can talk to someone and they either have WhatsApp, Facebook, or Instagram. Now, I don't know how much more they can grow considering that they have like 3 billion users, but that is absolutely impressive. Now, that's just from a growth perspective, but just goes to show that their business model of pretty much having this, not a complete monopoly over the social media network and site, but they are prevalent in one way or another. I don't really use Facebook that much, but I have WhatsApp groups that, I mean, with my work and just talking to people, assemble a WhatsApp group because everybody has it. It's easy to do that than jump into a messaging app like Telegram or something similar, or even a Facebook Messenger app might do that as an alternative. But that's the thing, you're always going to be playing in their ecosystem. Just phenomenal business on that sense. So with that in mind, let's jump into a price analysis. But before we do that, folks, do me a huge favor. If you're enjoying the video, hit the like button and hit the subscribe button. It means a lot to me. It makes me feel warm and fuzzy inside. Let's jump into this and see what's going on with Facebook and pull some numbers out. Now, oh, you know what I forgot to do also? What I like to do is touch upon the Almond Z-score and Piotrowski score. But that's sitting at a 6. It's somewhat of a mediocre number. We want this to be between 7 and 9. But Almond Z-score, phenomenal. Blowing it out of the water, guys. 9.86. We want this over 3. And they have that. It's crazy. I'm going to just fill these boxes in. So stand by, and then we'll talk about it. And I'll show you why I filled them out the way I did. So hold on for just one quick second. Okay, guys. So I filled out these boxes here. I'm going to just go through my reasoning. Assuming a low revenue growth of 10%, I have tried to be as conservative as possible. If you know me, you know what my channel is all about. I try to give the most conservative estimates as I possibly can, and then kind of level up from there to try to say, well, essentially what I'm trying to do here is give a proper margin of safety. So with revenue growth, I've done 10, 12, and 14% revenue growth. Profit margin, I've kept it just a slight margin of safety from what we currently have at 33, 34, and 27. So I've done 25, 26. I'm going to just do 27 for that. And then same with free cash flow margin, just a slight discount what we currently have. Price to free cash flow, I'm hovering around 10, 12, and 16 for the price to free cash flow. PE ratio, 12, 14, and 16. I think 12 is a little bit low. I have a funny feeling it should be roughly in here. And this PE ratio that we currently have is just over, I mean, it's, what's the word I'm looking for? Just unjustified, essentially. Desired return, we're going to put it at 13, not 1, 13% return. And this is why I like Facebook. This is why I like Facebook, guys. Check it out. Assuming a 10% revenue growth over the next 10 years. Keep in mind, folks, we're doing a 10-year analysis. with 25% profit margin, which they have shown that they're able to hit that. Free cash flow margin, they also show that they can be able to hit that as well. A low price of free cash flow, and same PE ratio at 12 for PE ratio, 275 in our discounted cash flow calculation. Price to free cash flow calculation is at 199, and earnings multiple is at 245. That gives us an average of 239.92. Our average in total for all of these, and these are all somewhat very conservative, just one slightly more aggressive than the other. Look at that, 14% revenue growth over the next, like, that's half, less than half of what they're currently doing, and we're getting an average price of $357 at a 13% return. To me, this is no-brainer. Full transparency, folks, I'm going to be picking up some more shares. I love it at this price. And currently, I'm holding it at somewhat of a higher price, I think in the 200 range, 200 something. So it only makes sense for me to average down. I like the company. I like the way the business performs. I don't see them going away. I see them getting larger and much more prominent as they move into this meta space. So with that in mind, there's a lot of runway for this company to grow. And I'm a huge fan of that. I like when things are in the pipeline, as well as the biggest component is this. I like it when a company has proven what they can do. And I guess I've been criticized a little bit in my other evaluations, especially with companies that haven't shown a profit or haven't shown much. And I don't really invest on, oh, what if this company does this? What if this company does that? Listen, I need to see a track record before I can make any kind of investing decision. It's wishful thinking to think a company is going to do leaps and bounds if it hasn't even learned how to walk yet. With a company like Facebook, it's very evident here, and I'll just pull it up so you don't have to see my big head. There's history with this business. Pulling up the chart here, you see the growth of the business. You see where we're averaging out. On our EPS, our revenue growth, our free cash flow growth, there is numerics that we can work with. These are all filled out. They're all positive numbers. When I see something like this, it tells me that there's substance with the business, and I can work with it and just try to predict the future. When you invest into a company that doesn't display things like this, you're shooting in the dark. You're throwing darts in the dark, and you have no idea what you're going to hit, if it hits at all. You might be overpaying for a company. Yeah, the price of the stock can go up, but at what cost? At what cost are you paying for that growth? With a company like Facebook, you're getting a $357 stock today by paying $180 today. Understand? That's what we're trying to do here, folks. And that's the main goal of this channel, to try to teach a process, especially to more younger investors. And I notice my demographic is within the 25 to 50 year range, and I really want to try to reach out to a lot more younger investors to try to think of how can I get the best deal. But we're trying to buy $1 for 50 cents, folks. That is the main goal of this channel, and this is what this app does. So if you like the app, stay tuned, because it will be available for you, my subscribers. So what are my final thoughts on Facebook? Ultimately, I still like it at this price. I'm glad the price went down. For me, it's on sale. My current buy price is in the 200s. I think low 200s, something like that. So I'm going to continue buying more. Now, what does that mean for you? The viewer of this video, someone that's looking to either invest into Facebook or average down on your current investment. I suggest that you continue to do your due diligence. If this makes sense to you, stay tuned, because this app here, this software here, will be available to you, my subscribers. This is a business that I don't see it's going away. There's a lot of runway. As I said, they have a lot of things in the pipeline that is trading at a discount. Does that mean you should go out and buy it? No, you have to do your own due diligence, but use this video as a stepping stone, and investigate more. It's all about the investigation. It's a mystery. It's a puzzle. That's what we're in the game for. And that is what we're trying to accomplish here on this channel, to try to help people, young and old investors alike, to develop that mindset to find deals in places that are uncommon. Don't get shaken up by the news. Look at the business. The news is all just noise. Personally, I believe that on all fronts. With companies in the stock market, the noise swings like a pendulum. One day they hate the stock, the next day they love it. Look at the fundamentals, and if it makes sense, get at it. Anyways, folks, that's the video. If you enjoyed it and you haven't done so already, hit the like button and hit the subscribe button. It means a lot to me. As well as more content will be coming out, hopefully on Sundays. That's the plan. And focusing more on the self-improvement side of things from an investment standpoint, and just other health-related items, because ultimately I want you to be better in your finances and just better in your overall well-being. So with that in mind, folks, I'll see you in the next one. Thank you so much for watching.